and welcome to the Gold Compass. Today I'm joined by Egon von Greyerz, the founder and chairman of Gold Switzerland. And welcome, Egon.
Thank you, Gregor. Good to speak to you.
The same to you, Egon. It's been a long time. You've been in the business of precious metals for, I guess, now 25 years. And given your experience, your long experience, and what we're seeing now with the gold price rising and the silver price also finally rising, what do you make of it? And can you also help me kind of what is noise out there and what is true signals? Because I'm finding a hard time to keep up with everything. There are so many things going on, and please help me filter out the noise.
Well, we're pleased to try to help you, Gregor. We've helped ourselves for a long time, and then we've been helping others. So I know you don't really need help, but nevertheless, the explanation of what's happening now is very clear to me. We went into this. Well, we went into gold and silver 25 years ago, and that was for the pure reason of preserving wealth. Obviously, at the time, gold had gone from $850 in 1980 down to $250 in 99. So we were waiting for this to bottom out. And of course, the best sign was that all the central banks were selling at that time. So that is always a good signal that they don't know what they're doing, central banks ever, and to do the opposite of what they're doing is one of the things one should always do. So, as I said, we saw the risks in the world. We saw debt increasing. We saw derivatives increasing, and this was already in the 90s. I was watching this and waiting for this to happen. And of course, as a student of history, I also saw that, with the debt exploding since 1971, when Richard Nixon closed the gold window and thus stopped the gold backing of the dollar and all other currencies, that this is from then on, debt grew exponentially. So it was very clear to me that we were at the end of a monetary era. The monetary era, no money has ever survived, as you know, in history. Every currency always go up to zero, but it can take time. And of course, the fact that you see it at a certain time doesn't mean that it will happen then. But the explosion of debt and deficits, and the general change in political atmosphere, and of course in moral values, which they all go together, that was giving us a clear signal that this is the time now to start thinking about preserving your wealth. So we basically watched this market for a few years, and then when gold seemed to have bottomed out in 2002, that $300, this is when we went in and told investors that we advised at the time to buy for up to 50% of their liquid assets or financial assets on gold. That was quite a brave statement. Now, we, of course, did not have normal investment clients. We advised some wealthy families at the time, and they were all interested in wealth preservation rather than maximizing return in the short term. They were long-term thinkers, and so were we. So we put a good chunk of money into gold at that time, and it was never meant to open up for outside investors, but then demand made us open it up for other people. And so because we had created a system of preserving wealth outside the banking system, or with holding gold directly in the name of the investor in safe private vaults outside the banking system. So and we were fortunate enough to, as I said, pick up gold at $300, which was the lowest for 25 years, basically, or 23 years. Then, of course, to me, it was very clear that we were going to see the end of this monetary era. That, gold going up is not really what we should look at. What people should look at is instead the value of money going down. And that's, so it's not gold just goes sideways. Gold is permanent or constant purchasing power. So to me, it was quite easy, especially since, I've been through a long life in business and in banking and investment. And I thought, now this was the time for wealth preservation. And of course, it's been a great journey since then. So we have seen gold since we entered that $300 going up almost 13 times in dollars, for example, and more in other currencies. But again, as I said, it's not really gold going up. It's the value of the money in your pocket, investors' money going down. And people don't realize that. They think that prices are going up. No, prices are not going up. It's of course, the effect of money going down in value is that prices are going up. But it's actually the pound or the kroner or the dollar in your pocket that's going down. And then, since then, since we started, we've had almost 25 years of bear market in the value of currencies. That's the only way people should look at it. They should not look at it as if inflation is actually increasing the prices, but it's the money that is going down. And of course, I thought that 2008 would be the end of this monetary era, but they managed to save it, for another now. So what is it, 17 years right now? But I think now we are getting to the acceleration phase of the decline of the currencies or paper money, fiat money. And that's why all of a sudden the world has actually started to discover gold and silver also as not just a medium of exchange or a derelict asset, but actually as the real value and something that throughout history has kept its value. It's actually, we call it nature's money. It's the only money that has actually maintained its value. And now we are in 2025 at, only still just over 0.5% of world financial assets are in gold. 0.5% only, which is quite amazing, and that's historically very low. That's going to change dramatically now. And now you maybe have seen that, for example, Morgan Stanley, which is one of the biggest asset managers in the world, has recommended, their CIO, Chief Investment Officer, has recommended 20% in gold. That is incredible. No one has ever recommended gold from any bank or institution or asset manager. And now we're talking about up to 20%.
And may I add, you could say that Morgan Stanley is a mainstream, call it, institution in some sort.
Absolutely, it's a major investment bank and very, very influential. Yes, absolutely. So the game is changing, and it's not a game. This is very serious. Investors think that trees grow to heaven and stocks and bonds and property go up forever. They don't. And my view, Gregard, I think that in relation to gold, we're going to see all these so-called bubble assets, which have been financed by massive credit expansion, which is, as I said, is stocks, bonds, and property. They will all come down 75 to 95% against gold. maybe even more. Bonds, a lot of bonds will default, so they'll go down by 100%. So that's what we are looking at now, with still most of the world not owning gold and not owning silver. So it's starting now. I've told my colleagues for many years that we haven't started yet, and we've had seen a very good growth of the metals. We've seen a very good growth of our company, of having wealth preservation clients that we're helping to protect their assets. But now we're starting, and this is going to last for a very long time, Gregor.
Yes, I agree. And it seems that it's going, as you've pointed out, we're in the exponential phase, and it's going faster and faster. You can look at let's call it the gold price and the silver price, even though I know it's not the metals going up, it's the currency going down. But it seems to be going quite fast for the time being, and there is all kinds of sanctions from the US and economic war and talk of gold revaluation, and there's one point that I wanted to highlight, and that's silver is trading finally above, has done for some weeks. It's trading above what the US Treasury has valued its gold at its balance sheet. I think it's valued at $42.44 at the balance sheet of the US Treasury, and now silver is trading way above that. How is there a gold revaluation some way coming in, and in what way?
Well, there are many people who talk about gold being revalued by the US to $20,000. I don't believe this. The US is losing its financial and economic power totally. They're massively indebted. The dollar is declining. It's going to continue to decline, and not in a straight line. Nothing does. But with that economy and that amount of debt, the power is shifting, and we've been saying this for many years. It's shifting from west to east. It's shifting to Asia, to southern countries. It's shifting to the BRICS countries, and the powerful nations in the coming, I don't know how long, at least 50, 100 years, will be China, India, a lot of Asian countries, and Russia. Of course, nobody likes Russia today in the West, but remember, Russia has about $85 trillion of natural resources. They are extremely powerful, and no countries can be sanctioned forever or be at war forever. So and what has happened, of course, is also that Europe and the US has driven Russia, China, North Korea, Iran together as a very strong entity. And this has been happening gradually, but seeing them meeting in China recently and holding hands, this was a real sign to Trump and to the US and to the European leaders, who are all very weak and just want to make war to be important, although they have no chance in any war from the point of view of weapons or money. Or even armies, but they still want to. They have problems at home, and then that's when you start a war. So, but the Eastern countries or the BRICS countries, they are going to be so much more powerful than the Western countries, which are all in decline, and therefore. This is where the future lies, and they understand the importance of gold. I mean, they all hold a lot of gold. Some of their trading or trade between countries, etc., will be settled in gold in the future. The balances will be settled in gold, and of course, when we talk about now central banks buying gold more than ever. This is of course started, as you indicated, this started with the sanctions by the US and Europe of Russia and the confiscation or freezing of the Russian dollar assets. No one's going to put any assets, especially not central banks, reserve assets into dollars anymore because they're at risk. So everybody's gradually shifting their dollar investments to gold. It's going to take time because they are not going to rush it and drive the price too fast up. But it's happening, and it's happening day by day. And on top of that, now for the first time, we're seeing major investment banks or investment managers recommending gold at a very high level. And that of course a whole investment community will follow. I mean, they're all lemmings, that nobody, you should buy an asset when it's underpriced, undervalued, and unloved, but still has real value. And this is of course what we did in the beginning of the 2000s when we bought gold in a major way at $300. So people will ask now, is it too late? A lot of people have been waiting. There'll be a correction. There'll be a correction. Everybody's waiting for the 2008 correction. It won't happen. It's not the same today. Today, there is a fundamental shift away from the West to the East, to countries who understand gold and the importance of gold and who hold gold to a much greater extent than the US. US probably doesn't have anywhere near the 8,000 tons, whilst China, Russia, and many of these countries probably will have a lot more gold than they are officially declaring. So this is where the power is going. As I said, the investment community will follow the money. It has always followed the money. And the money goes, or the center of money is now moving to the east. It's not going to happen overnight. Of course, the New York and London, etc., are still powerful, but they've built up an empire on debt, and the future world economy will be based on commodities, real values, and proper trading, not on funny money and on derivatives and massive leverage, etc. So that's they'll be good for the world and bad for the West. The West is in a decline, which will, as I said, all empires when they die. I mean, it takes a long time to die. They started already a long time ago, but it will continue whilst the sun in the east is rising gradually but strongly.
You mentioned central banks buying gold, and take Europe for example. A lot of the countries in Europe have gold. The central banks, they have gold from way back when. But I think it's quite interesting to see that, for example, Poland, they said some years ago that they wanted to increase their gold holdings to 20% of their the central bank, increase the reserves to 20%. Now, yesterday I saw, maybe this is old news, but I saw it first yesterday. Now they want to increase the gold holdings to 30% of the reserves. Still European country, they're buying, the other countries are not buying.
Yeah. Yes, actually, you're absolutely right. Poland is one of the exception of the European countries buying gold. The others can't afford it. They only have debts, and they have problems servicing that debt, and they all have to increase the debt, and it's going to increase exponentially until they can't borrow anymore, and the bond market starts collapsing. But Poland, as I said, is an exception. But I mean, talking about collapsing bond markets, I've always been clear that since 2021, when we saw the bottom of the interest rate market, the interest rates came down from 1980 at the peak, especially dollar rates, but the whole world the same. and bottomed around 2020. So it's been a slight increase in short-term rates in the US. I am of the very firm opinion that interest rates are going to go much higher for two main reasons. One, inflation is going to continue to increase because of, as I said, the continued money printing and deficits, and also the demand for money, for credit, is going to increase dramatically. And if demand is increasing, so will the cost of this debt. And nobody's going to be, and whatever short-term manipulation the Fed is trying to do, pushed by Trump to lower the rate by a quarter of a point, there could be another rate reduction, but the long-term trend is up, and we are going to see rates at least to the level that I saw in the 1970s, which is in the teens, and up to 20%. My first mortgage in 1973 in the UK was, I think, 21%. 21%. How many people in the world today do you think could afford 21% interest on their housing costs? Nobody.
In the West, none.
Yeah. So this is going to be a massive change, and will create, sadly, a massive downturn in the Western world economy, and big suffering. And this is why also nations, whenever there is a downturn that they can't control, this is when they start wars, because wars then shifts the focus to fighting for a common purpose, which is a horrible way of dealing with debt. But that's what they're doing. So I doubt that the wars we're seeing in the local wars we're seeing in Eastern Europe or Ukraine, Russia, and what we're seeing in the Middle East, I doubt that they will stop quickly.
No.
Our only hope is, of course, that they will be limited. But if the US attacks Iran once more with Israel, that is a major risk, bigger risk than the Ukraine war, in my view.
Yeah. Yeah. Sorry. Go ahead.
I can, as I said, I can only hope that is limited to that, because, as we all know, the consequences of a nuclear war is basically the end of the world, or could be the end of the world. So, and that most leaders do, but we know that in a war, accidents can happen, and the false flag attacks can happen. So it's not going to be a good period now from a geopolitical point of view, and we are clearly in a war cycle which is not going to end overnight.
Yeah. And I know you've talked about that, and I see a lot of other people talk about it as well, and that's capital controls here in the West, in the Western countries. Can you elaborate on that, please? On your point of view?
Well, that is something that is inevitable in my view. What can governments do? They've got two tools here. Number one is to increase taxes. When you're running major deficits, taxes need to go up. And that's happening, for example, in the UK in a major way. It's happening in most European countries. And it's happening to a lesser extent in the US now, but the trend will continue. So you will have a lot higher taxation, and I've said that for years and years, well, for at least 25 years, that tax management or looking after your the net money you earn, and minimizing your tax expense is as important as investment management. But of course, most people don't have the ability to just move to Dubai, on top of that, many of us wouldn't like to move to Dubai either. But a lot of people have. But there are other countries with low tax rates, and of course you've had a lot of Norwegian billionaires who moved out of the country, and I can understand that when they're taxing, wealth to the extent that they're doing, and the same is happening in the UK. They kill this non-dom tax system, which has been around for well over, I think, near 200 years. That non-domiciled residents of the UK had a tax advantage. That's brought a lot of money into countries like the UK, but that's all disappearing now. So that tax is one way to control the people and raise more money. The other one is, of course, capital controls. Now, what we're going to see, is a increasing exodus of funds out of many countries, especially the countries with high taxation. Norwegians, as I said, especially the ones with big money, will transfer money out, or some of them will also transfer residents out. We're seeing Americans also transferring major amounts of capital into Switzerland. I mean, it's been reported by the Swiss banks that there's a very, very big flow of wealth coming from the US to Switzerland. So I could see capital controls in the EU. I could see it in the US, in particular those two regions, and therefore, we tell people that, get your money out now. Tell the Americans to transfer the money out to Switzerland, for example, potentially Singapore also, and a lot of EU people or residents we see transferring money out of the EU to Switzerland, which is not part of the EU.
And a capital control, would that be the government putting a hard stop on the transfer of money out of the country, right? They're saying
Correct.
You have to keep it in the country.
Yes, exactly, except for normal, trade business, where you buy goods, etc., for the country. Then that will be allowed, but sometimes you need a permission for it. But that will be allowed. But transferring money out will be very strict limits on, and very strictly controlled. Also, we've seen that before. I remember when I lived in the UK in the early 70s. They checked. But if you went out out of the UK by car, for example, into Europe, they wanted to see how much cash you had on you, even if it was just a few hundred. And that's most probably going to happen again. And within Europe, it's obviously going to happen, with Switzerland being financially by far the strongest country in Europe when it comes to debt and deficits, financial management, economic management, and general soundness of the political system. And therefore, there will be continued transfer of money to Switzerland. And of course, we also see ourselves, we see a lot of gold investors moving their gold out of Germany to Switzerland. But that's going to become much harder and potentially stopped. So the time to now transfer your money out, whether you're American or German or French or whatever you are, time is now, because as I said, it's going to be almost impossible at some point.
Yeah. And in terms of your experience and your view on gold and what's happening in the world, how do you view? You mentioned Morgan Stanley's 60-20-20 portfolio, so 60% equities, 20% bonds, and 20% gold. What's your view on, call it an allocation of one's assets? What's your view on equities versus gold? I know you talked about it previously here, but can you be very specific?
Yeah, well, you could say that my view and advice has been extreme for the last 25 years. But, as I said, I'm a student of history, and I try to understand, what has happened in the past. And I know that looking at history is therefore going to happen again. I mean, you can, the Churchill said that the further I look back, the longer I can look ahead. You can read, if you want a more modern version, you can read Ray Dalio's books. He's an extremely good analyst. Of course, he's probably the most successful hedge fund investor in the world with his Bridgewater. But now in the last few years, he's spent his time trying to understand what has happened historically and to educate people. It's a very good series of books that he has written. And for people who are interested, they should pick up one or two of these books, especially the ones that talk about history and the fact that it's happened time and time again before. So it's not very difficult to forecast what the end game is of a monetary era. Of course, what is harder to forecast is when will it happen exactly. You can't time it to the year. I mean, as I said, I was premature 35 years ago when I thought this is going to end soon, this monetary era. When I saw gold becoming very cheap, we went into it or recommended it to the people we advised in early 2000s. I thought that the economy would crash a lot earlier than it did, and as I mentioned before, certainly around the great financial crisis in 2007 to 9, it didn't. Central banks managed to print a few trillions of dollars and to save it temporarily. And so the big crash is still going to happen. I mean, it's not going to be overnight. It is a gradual process, but there'll be periods of very rapid declines of assets, whether it's stocks, bonds, or property. And that's going to happen. It was clear to me that you can't buy fire insurance after the fire. So we went in early. Asset markets continued to go up. I mean, I have a son-in-law who spent 22 years as a managing director at Morgan Stanley on the investment side or the equity sales side, and we would discuss every year with our guys said that the stock market is going to crash. You should buy gold, and but for about 23 years we discussed this, and gold was going up and stocks were going up, so we were both okay, and right in our view. But the end of that story is that my son-in-law has now, since last year and a half, he's joined us. And he saw the light. And now he sees clearly, as I've been seeing, that the future is not going to be in stocks; it's going to be in gold. And now, of course, his bank, since he left, is starting to discover gold also. So it's such a wonderful attitude to money, which is no one has ever thought of. Preserve your wealth, and if you preserve it in the right form, it will also enhance it, which means it will grow, and it will grow year after year, not in a straight line. We are now going to see a precious metals market, which is going to go up very, very fast. But in between that, there'll be vicious corrections when everybody will say it's finished. But it won't be finished. Whatever corrections we're going to see in the next few years are going to be just corrections of the main trend, which will continue up for a very long time. I think there will be a total revaluation, a permanent revaluation of gold and the way we look at gold as money. There's always been money for now. Let's say the paper money era. Let's say this started in 1971 when the gold backing of the dollar was taken away by Nixon. So now we've been in the paper money era. But paper money, always reaches its intrinsic value, as Voltaire said, of zero. And so that's what we are seeing. Is paper money is down 99% since 71, and it's going to go down. The last percent, which is the last 1%, is going to go down, which is 100% from here, of course. And that's what we are witnessing right now, the acceleration of that trend. So this is why I come back again to investors. I know Norwegian investors have never understood gold because their central bank got rid of all the gold quite some time ago, and no investment manager has ever, for the last, I don't know how many years, 20, 30, 40, 50 years, maybe not, almost that long, recommended gold, because they can't churn commission on gold. They prefer to buy and sell stocks. It's irresponsible for the client, especially for the wealthier client, because the wealthier client, their purpose is to preserve generational wealth. You don't do that by trading in and out of stocks, bonds, equities, derivatives, private equity, etc. All of that will end very sadly, but the investors haven't understood that yet. And I'm not a gold bug. I'm just someone who tries to understand risk. That I've done that in my banking life, my corporate life, and in my investment life. You protect the downside, and the upside will take care of itself. And that's what gold has done for the last 25 years and will continue to do for a long time, since, as I repeat, all other assets, virtually all bubble assets, especially stocks, bonds, property, etc., they will decline dramatically against gold. So it's very simple, and people can just buy the gold and some silver, because silver has a tremendous potential now, and put it aside, sleep well at night. You don't need to look at the price very often. It's gonna, it's not a 1 day investment or a 1 month or 3 months. It's a 5, 10, 20-year investment, or longer. As a matter of fact, I think after this era, there will be panic in this era, and as I said, gold will be permanently revalued, because people will see that as a major part of any portfolio, as Morgan Stanley recommended. And I think in the future, whether it's 20% that investors will hold or whether it's 10%, but I'm sure that in the future, every portfolio manager will consider gold as an asset that they need to keep at the bottom of their wealth pyramid, whether, as I said, it's 20% or whether it's more or less. But nobody is going to be able to create an investment portfolio without holding a considerable amount of physical gold, and as we are doing, and as your clients are doing outside the banking system.
I agree, Egon, and that's what we're trying to tell people and explain to them. And I agree with you totally that I'm not either a gold bug. I just look at the as you said, the risk, and I'm an anti-inflation guy. I don't like inflation at all. We shouldn't have inflation because that's stealing people's money. And gold serves the purpose of checking the inflation.
Yeah, and we've known each other for many years, and I've really encouraged you to go into the gold business. Of course, it was your idea, but especially for Norway, which is it's a virgin market. No, nobody owns gold basically in Norway, less than any other country. But I think the time for the Norwegians to now discover the virtues of gold and the importance of gold as a wealth preservation asset, number one, but also as an asset which will most probably go up substantially in relation to other assets. That the Norwegians, like many people around the world, will now discover, and you've done a great job in creating that market for investors in Norway, and of course we also have cooperated on bigger clients for our mountain vault in Switzerland. So yes, it's and I think we're only at the beginning of this gold market.
Good. I think that would be I think that those were the good last words, and I thank you so much, Egon, for taking the time. I know you are busy, and yeah, thank you for joining me, and I look forward to seeing you or talking to you soon again.
Absolutely, very nice to speak to you. If I may add a couple of words. First of all, we didn't talk a lot about silver. I think silver will go up by multiples because there's such a shortage of silver in the world, and it's used both industrially and for investment purposes. So it's going to be much more volatile, but for investors to own some silver also, we are recommending up now to 30% of the total holdings of precious metals, which is higher than we've ever recommended. But it's because now what's likely to happen is silver, as I said, going up a lot faster than gold. But people have to remember that the corrections are also going to be faster. So you don't sleep as well at night with silver, but in the end, it's going to be a very profitable way of preserving wealth and enhancing wealth. So
Yes.
it's important also.
I agree totally. Thank you very much, Egon.
Thank you very much. Thank you. Good to
Bye
speak
bye.
to you.